does Medicare cover weight loss surgery? And the answer is yes, Medicare will cover some weight loss surgery as long as certain conditions are met related to morbid obesity. So it really is going to depend on your current health situation as to whether or not Medicare will pay for weight loss surgery. So then the question is, what happens if you need or want weight loss surgery, but Medicare won't pay for it? The good news is there is an alternative way to pay for weight loss surgery if Medicare won't. So if you didn't know, and I'm sure you've probably already done research, but weight loss surgery can be expensive depending on the type of surgery that you're getting, the service provider, etc. So according to WebMD, average cost for weight loss surgery can be between $20,000 to $25,000, which for a lot of people in retirement and living on a fixed income, that is a big stretch financially. So the question is, how are you going to pay for your weight loss surgery? So again, Medicare will not cover it unless certain conditions are met. There may be Medicare Advantage plans that will pay for it, but again, it's unlikely to cover weight loss surgery unless certain conditions are met. So that leaves people to either pulling money out of their retirement savings or using credit cards to pay for the surgery that they want and need. So as I mentioned, there is an alternative way to pay for surgery, and that is to pay for it with a reverse mortgage. And there's several different reasons to consider the reverse mortgage, and there's lots of different ways to structure it to help pay for the surgery that you want. So first and foremost, if you owned your home free and clear or had a smaller loan balance, you could potentially use the reverse mortgage to get access to enough cash to be able to pay for the surgery. So instead of using your retirement savings, you could use the proceeds from the reverse mortgage to pay for that surgery. The other option you have is to consolidate debt. So you could consolidate your mortgage, car payments, credit cards, etc., into the reverse mortgage to free up enough cash flow so that if you did finance it through either a credit card or a care credit card, that you have the ability to make those monthly payments comfortably. And finally, by getting the reverse mortgage, you could be better prepared for other large expenses during retirement, such as future health care, home repairs, car repairs, just other financial shocks that are likely to pop up through the rest of your retirement. So let's take a look at the scenario of Jill, who is 65 years old, $3,000 a month of income. She has her home free and clear, and she has $65,000 in retirement savings. So this is a reverse mortgage is not something that Jill would typically consider, but Jill really wants and needs to lose weight, and she's tried everything to lose weight. She's tried jazzercise, Zumba. She's tried all the different diet plans. She's tried the pills and the potions and lotions, and nothing has ever worked for Jill, which is why she really wants to get the weight loss surgery done. However, she doesn't want to use her retirement savings because if she pulls out $25,000 from her retirement, she's taken out almost half of that money that she knows that she's going to need at some point in the future. And she's not really sure about taking on a credit card payment to help pay for the surgery. So Jill reached out to me to see if the reverse mortgage might be an option for her to pay for her weight loss surgery. So we came up with a couple different options for Jill. And this first option, again, draw the money out of the reverse mortgage to pay for the surgery. And that's represented by this bar chart down here. So the blue represents the home value, assuming a 4% appreciation rate. The orange represents the loan balance, and we can see this loan balance is increasing over time. And the reason it's increasing is because we are making the assumption that Jill is not going to make a monthly mortgage payment towards the reverse mortgage. She still has to pay her property taxes and her homeowners insurance, but because she's not making a payment, the interest in the mortgage insurance is getting added to the loan balance, and therefore it's growing over time. The green represents the line of credit, And initially, we can see we have a $124,000 line of credit. That's what's available to her after lumping in the closing costs and drawing out the $25,000 to pay for the surgery. Now, we can see this line of credit is also growing over time. And the reason the line of credit is growing is because it grows at the current interest rate plus 0.5%. Has nothing to do with the home value whatsoever. So even if home values went down, this line of credit would still continue to grow, assuming funds were available, and it would grow at the current interest rate plus 0.5%. So initially, we can see we're starting off with that 124, and that's actually almost twice what Jill has in her retirement savings. So again, she's setting herself up financially to have more funds available should those large expenses pop up at some point in the future. So let's say in 10 years, Jill needed to get a new roof, and it was $40,000 to get the roof. She could draw that money out of the line of credit. And the great thing is that she still does not have to make a monthly mortgage payment. She still has to pay her property taxes and her homeowners insurance, but any funds she draws out of the line of credit, she is not required to make a monthly payment. Now, Jill didn't really like this growing loan balance, and she figured, if I was going to finance it in any other way, I'd be making a monthly payment. And so Jill said, you know what, I feel comfortable making a payment of $500 a month. And so that's option 2. So again, we're drawing out the $25,000 initially, but Jill is going to make a payment of $500 a month. That changes things dramatically in this scenario. So again, the blue is the home value. The orange is the loan balance, which we can see by year 10. She's got that loan balance paid down to $4,800. And we're making the assumption here that she just stops making payments in year 10. She still has to make her property taxes and insurance payments. But we can see this does increase slightly over the next 5 years, again, because we're assuming that Jill's not making a monthly mortgage payment. Now, the green is that line of credit. And again, that line of credit has grown significantly. In fact, by making that monthly payment and not drawing any money out of that line of credit, in 15 years, when Jill is 80, she's expected to have over $500,000 sitting in this line of credit. And that comes at a time where Jill's healthcare expenses are likely to be higher. She may need help with cleaning the house, paying a yard keeper, just her expenses in general will probably be higher at that point in her life. And now she's got a giant chunk of cash that she can draw from to help supplement her income and pay for other expenses. Now, if we look at year 10, here in this option, we owe $4,800. There's a $347,000 line of credit. In the previous example of not making any payments at all, she has a $93,000 loan balance and a $259,000 line of credit. So by making that payment, she's essentially reduced her loan balance by $89,000, and she's increased her line of credit by about the same amount. So again, by her making payments, what's happening is not only is she paying the loan balance down, but dollar for dollar, it's increasing her line of credit, and then that line of credit is growing. So it's almost kind of like a savings account from that standpoint, where she's making a payment, she's paying her loan balance down, but she's increasing her line of credit. That line of credit is growing, so she has more and more funds available to her to use at some point in the future, again, to either supplement her income, to pay for other financial shocks that may pop up. So there's several reasons to consider getting a reverse mortgage to pay for the weight loss surgery. First and foremost, Jill's not getting into credit card debt, which, again, living on a fixed income can be a really slippery slope. She has the ability to retain her retirement savings, which is important because pulling a bunch of money out of her retirement savings could come with tax ramifications, and she's more than likely going to need that money at some point in the future. The reverse mortgage creates flexibility in the monthly mortgage payment. So she doesn't have to make a payment. She can make a full payment. She can make a partial payment. She can pay as much or as little as she wants whenever she wants. And unlike any other type of debt, this reverse mortgage creates flexibility. Any other type of debt is going to require that monthly payment be paid in full every single month. Now, she still has to pay her property taxes and her homeowners insurance. The other thing it does, and I think that this is really critical beyond paying for the weight loss surgery, and that is it creates an additional source of retirement funds with that reverse mortgage line of credit. And that's important because Jill is likely to face other large expenses at some point in the future, whether that's future healthcare costs, long-term care costs, home maintenance. There's just a lot of future expenses that can be quite hefty, and being prepared with an additional source of funds can be critical. And of course, Jill gets an improved quality of life with the weight loss, and she obviously is probably going to feel a lot better about herself and also just physically feel better with that weight loss. So you want to see how this would work for you. Want to look at your numbers, look at your scenarios, look at your options. Want me to do forecasting? I'm happy to answer any and all questions that you have about the reverse mortgage. There's no cost to speak with me. There's no obligation to speak with me. I'm happy to put this stuff together and again, answer any questions that you have about the reverse mortgage and see if this would be the right option for you. I look forward to speaking with you, and we'll talk soon.